Hello everyone, welcome to a new video. This is your mentor Vincent. Today we will have a lesson on how to know or how to determine when the trend has ended so you don't continue trading opposite with the trend. So this lesson is basically learning about the tricks of trending with the trend. Remember, there's a saying that says the trend is your friend, and you must always follow it in the market so that you can capitalize and make some profits. So in this video, I'll give you a short preview or a strategy of how to determine if a trend is still going in the way that you were trending or something has changed. It's going to be using the higher lows and the higher highs. So we determine what's happening with the trend. Without wasting time, we'll get into the video and get to learn. First, I'll pull out the path. I'll create a path and show you an example in a line chart so that it's easier for you to pick it up when we're looking at the real chart. So first, we will create this path showing you the higher highs, higher lows, higher highs, higher lows, and then something this format and come back like so, like that, like so, and maybe a bit big swing like that. So what are we looking at here? See that the market has actually made a low here, and then now from the previous time it actually made a high here. So immediately when the market breaks this level here to go to the top side, at this level, when it breaks it, it forms another high here. So this is going to be called a swing high. And then this one will be a swing low when the market comes back. And you notice that the swing lows will always have a higher value compared to the previous low. So meaning that once this swing here comes below this, it will be breaking the trend. So you can see now the market continued to form another swing high here, making this level here the one to break to notice if a trend has changed. And you can see another swing low, which is what? Higher than the previous, it's a higher low, higher than the previous lows. So we're forming higher lows, higher highs. You see this high here and another one here. So this is higher high, higher high, higher high. And then we go to the next swing here and we can draw it like this. And you notice that still right here, we're noticing a higher high and then higher low again. Now, here's where the trick comes. Now the market did not form a higher high. So this one here, we don't call it a swing yet because it is not closed above the previous high. So this swing here, we can call it a higher swing or higher high until we see where it will close. So the market will come down and break the previous low. Immediately when the previous low here is broken and this one closes below this one, it's a hint that the market has actually changed the path. And what you want to do in most cases is that you don't trade here. You don't quickly lock in your guns and start opening trades to the downside because you're seeing that the market is broken. No, you wait. You wait for the market to go back to the level where it broke, because this used to be a strong level where the market has actually took a 10. So look at here, it turned at the high and went to the bottom, crossed it, come to this level to test it and broke above, and then now breaking a very strong level, meaning that the market will always go back and respect where it was tested. So now, knowing that information, so we wait for a pullback, call it a pullback to the previous structure where market actually broke. So this is actually a very good way of checking or knowing when a trend has actually ended and a new one is forming. Because from there, you can see that a new low was formed, which is lower, it's a lower low compared to the previous one. And then when a new high is formed, is still lower than the previous high right here. And then another lower low was formed. So that tells you now we have a new trend. Go in that direction, and another one going like that. Then we can even have a trend line, just like the same way that this one was going in this fashion and that fashion. You see, that is so simple. And the same thing will actually apply here if we start to see that now we are forming a new high here, and then in this format like this. So immediately when we have a break of this level here, right here, because this was the previous structure which broke. So immediately that structure, if it's broken, then we wait for a retest at these levels here, and that's where we will take our long. Oh no, I wonder what's going on here. I'm trying to get a long position. Yeah, there you go. You get to your long, and how do you position your stop loss? You know that you will have a high. So you look at the left, this side where the structure is, and then you put your target looking at the previous structure. And then it guides you, because this was once a very strong level. Therefore, the market will likely be able to test it if it's going to reverse back to the bottom again. And then in terms of stop loss, if this one breaks, or if this level breaks here, because this was a very strong level, then you know that the market is actually now disrespected the trend. Maybe the trend is changing once again. So you must always make sure that you obey that. So let's go and look at the charts and see a real example that has actually happened. We're looking at the Euro US dollar. I'll just go to the daily, and then so we can be able to see everything clearly and understand what we mean. So I'll look at this structure because now we have an uptrend and a downtrend, right? So this is how you'll do it. You can see here we have a, let me just zoom in a bit so that everything is visible. Yeah, it fills up the whole screen. Now, I hope it's now clear for everyone to see. Okay. Let's remove this and add a new one. So you can see here we have previously a low right here, and then now we're forming a high here. And then should this one break here, we're forming a high at the bottom, at the top, and then we are actually forming another okay, this is a high, which is the high that is above the previous high. So it's a high, and then we form in a new higher low right here. And now structure is telling me that we have now broken this one, and then we formed a what? A higher high, another higher high, the third one, 1, 2, 3. And then we're hoping to form what? Another one. So we keep trending with the trend. So usually this is where you put your trend, your trades. You always open your trade, put your longs right here, and then targeting that high. So in this case here, it didn't work out very well, but here it did work out, where you can target even the high. So let's look at the change of trend. So now you see, we'll just make this very small, that for the first time, this level was broken to the bottom right here. See? So immediately when this happens here, because that's where everything is boiling, for the first time, this level here was broken. Here, failed to break. And here, it was when it broke the downtrend to the upside. Then we've been going up. And now, for the first time, we're breaking the high. We're forming a lower low, which is almost the same level as the previous low. So we passed the previous high, which is here. We broke it and formed a very lower high, because we can just say here that here's the low that we'll probably expect, and then however we made even a lower low. If it closed here, it continued upwards, we know that we are still continuing the trend. But immediately when it breaks here, we're actually looking for a retracement to this level or a retracement back to this level. Sometimes the retracement will come here or either there. So you just have to be patient and wait for the break of the structure. Because immediately when the structure breaks again, that's when you'll take a sell. So I'm going to actually remove some of this so we can continue. So you see here that since this one broke, we went to see a retracement back to the top. So we're forming a double top. And a double top pattern is actually a pattern of reversal. When you see it happening that there's a top and goes back to form another top, then we are seeing a reversal. So double top, you'll see it will look like this. And then here will be your neckline. So once the market breaks this, then you know that it will be continuing to the downside. So that's how easy it is with a double top pattern formation. So now it's easier now for you to trade, because now you saw that we've broken this, and then what the move going backwards is a retest. You expect a retest 1 here, and then the retest 2 at the double top. And then this usually happens a lot. Then after that, it breaks to the downside. You wait at this level here and the previous support of this structure. That's where you actually put your sell, your short position. You put it here, and your stop is usually above this, and you are targeting a very healthy, maybe 2-1 or 3-1. So for me, I'll probably go for a 2-1, a risk reward, so that I get to win double what I'm risking in case if the market goes backwards, and then I will be out at this level, because then my structure will be invalidated. It will not be happening as predicted. It is possible, by the way, that the market can form a treble top like this, like this. So that's why it's actually important to put your stop above this high here, because now if the market forms a triple top, you could be taken out of the market prematurely. But still, it's up to you how much you want to risk and then how much position sizing you are doing, so that you can know how much to risk and then and take that trade. Immediately when this bounce here, you can see that the market also formed another. Look at that. Once the market broke, it formed another double top. See, there you go. So we have a huge double top forming here, and then another one back at the neckline where the market broke initially. So this is how you tell the direction of the market. I hope everyone understood and it was easy for everyone to understand. If you have any questions further that I didn't address in the video, you are welcome to talk to me in the comment section and I'll be happy to help, guys. Happy trading. And if you're interested in this content, go ahead and start to subscribe, like, and comment in the description below, in the comment section below. So look at this. I'm just going to finalize, and you see more of those swing, and then swing low and the high, and then we have a swing low here. And look at the structure here. If this structure breaks now and ends at the top here, so we know this it's been invalidated, then we'll be waiting for what? We're not getting to the trade. We'll wait for market to come back here or come back to this bottom here. So we can have a double bottom to trade. So either way, the market will go back and come either to this level right here in this format, this way, then, or the market can just simply go in this path. So either way, the market can make that move. So you have to always be prepared, but this is the level where you take trades. You always take trades here and target your stop loss up below this. For example, if this is a long here, and you will risk up to here and then target all the way. I always go 2-1. So I found it working for me under my strategy. So 2-1 for me. So you can see this was the previous high where it broke to the downside. So I'm targeting there. It's my 2-1. Then I'll be holding this trade for the next coming days instead. Well, this video is actually just dragged a bit. I'm going to end it here, and I hope to see you on the next video, guys. Bye-bye.